FinTech is something that seems to be a buzzword, but it's essentially where the world is going. Technology, globally, we have to be globally advanced. We have to know what's going to make South Africa globally competitive. And FinTech has been one of those themes that seems to be a buzzword, but it is a reality.
If you Google or if you read anything that has to do with FinTech, the general definition of FinTech is the application of technology to financial services. And that is interpreted in different ways by many various and different people. But the one thing that we've borrowed from, particularly as Alpha Code, is global trends around FinTech. FinTech in itself is an industry. FinTech is when we see the use of technology to deliver goods and services more efficiently within the financial services industry. So cutting costs, operational efficiencies, customer service, bespoke opportunities for businesses. That is the most basic way that I can describe FinTech for anybody today.
Financial services is changing a lot, and I think it will change beyond recognition sooner than we actually realize it. You know, if we think about the world that we're living in right now, our governance structures and our money is limited to plots of land. Those plots of lands we call countries. But we're moving towards a society that's transcending these man-made imaginary borders that we place restrictions on our own selves. Okay? And is causing us to have difficulty. And we see that difficulty around the world. Anything of value is based on perception. And it should say something to you that there are people in this world that are willing to sacrifice $1,153 today to buy one of these things called Bitcoin. And guess what? Bitcoin does not respect boundaries of nations. It's beyond that. It's gone way, way beyond that.
FinTech businesses are traditionally sold largely to businesses. Because if you think of FinTech, there are very few B2C businesses in FinTech. Most of it is B2B2C. You know, you have a consumer at the end. So who's probably going to be the buyer of your technology? It's probably going to be a financial institution of some form. Have any of you dealt with the sales cycles of financial institutions? Weeks, months to get meetings, to the first meeting to get to the wrong people, and to run it again and run it again. You're often talking about 9 months to be able to get to contract. Okay, you know, you can have a baby in that time. That contract does not give you revenue. It gives you a piece of paper. What that piece of paper is going to generate is going to pay your bills. You need revenue to pay your bills. So that's just the way to get in the door to start making it. So the faster you get your contracts, the faster you get your revenue in.
If your businesses pander to a particular portion of the world, whether that portion is a nationality, or that portion is, I don't know, a small area or a niche group of people, you're limiting yourself. And I think FinTech, and specifically the tech part of the FinTech, is recognizing that and is saying, wow, we actually need to spread our thinking a little bit broader than what we're used to, because the world is becoming a very small place.
Currently we have 6 businesses that play in that space as Alpha Code, but I think for me the most interesting one is 3 gentlemen that came out of WITS, and they were considered nerds in their time, but they set out to say we've got a passion for mathematics, and what they do is they build algorithms from scratch. And their tagline is they want to solve Africa's toughest problems. And they only employ the top 2% on the African continent, so they typically compete for resources with Google, Facebook, Twitter all the time. But what these guys have done and what they've shown us around data analytics is how you're able to use data to make sense and solve day-to-day problems. They've got solutions around telematics, which is what a lot of insurance houses are looking out for, alternative credit scoring models. They've even had solutions in crime and education. We all know that we've got an issue around teacher to pupil sort of ratio, and they've solved that. One of the things they're recently working on is an early cancer detection test, all from algorithms. So what they're teaching us is that they're able to take data that businesses have been sitting with for a very long time, and they're able to use that to transact with us by making it make sense for us in our day-to-day lives.
You think of eBucks now as a loyalty point, and that's how everyone is now knowing it. It started its journey differently. It started its journey as 13 different business ideas wrapped into one, and the underlying concept was that you had a digital currency, which was the eBuck, which was the points that could be moved amongst people and rewarded to customers. So it started off as a digital currency. It was the world's first bank-backed digital currency, not a cyber currency, but a digital currency. We put it together, but we didn't have one idea. We had a whole bunch of ideas. Because the problem we were facing with was not that somebody needed a bank-backed digital currency. We had the issue that you had a bank, First Rand, which just become First Rand, which needed to do something in the e-commerce space. So we needed to do something. We didn't know what. So we put a task team together. They all thought about, okay, what are the different ideas? Okay, so we need to be in payments. We need to be rewards and digital currencies and all sorts of things. So we threw 13 different ideas together into the pot. And eBucks was sort of the distinctive thing to say, okay, that's different. But yeah, internet banking was part of what we threw in there. So we took internet banking out of FNB, which had launched it 3 years before, and we put it inside eBucks. So if you cast your mind back, you might remember doing your internet banking on ebucks.com. Then we did mobile banking, because mobile banking and internet banking, the same thing, just using different channels. So we threw all these ideas together, and then we just ran them. And we didn't know which ones would work or not. And in that sense, we were very much a FinTech startup.
When you look at the way FinTech has evolved globally and some of the things that we're seeing in South Africa, first and foremost, one thing about FinTech is that FinTech businesses typically attack a certain vertical within a huge financial services institution. They're able to provide niche and bespoke, highly customized products or services to a particular clientele.
We still look at it now and we think, oh, the bank is playing a role in the payment system. If you unpack it, there are far more merchant terminals now owned by the merchant than owned by the banks. So you might see an FNB payment terminal, but most of the retail tools you go through at Macro and all those sort of places, Macro buys them. They buy them directly from China and they put them in directly, they certify them themselves. The network that carries that transaction over isn't a bank network. It's typically a transaction junction, Eccentric, or one of the other professional commercial private companies, a FinTech company, carries that message over and then chucks it into MasterCard or Visa, another FinTech company, or BankServe, and then it actually runs across the banks. The banks don't actually carry those messages to each other. It only enters the bank system when it goes and says, is this good for value? Can I actually withdraw 132 Rand and 17 cents over here? It's actually only on the issuing side. So the banks are actually playing very little roles if you actually unpack that. Most of the payment space is now open and is run by fintechs. So I look at that and go, why do banks play any role in the payment space? Same as person-to-person payments. I mean, yeah, so if you know your bank account number, I can send you money. But that's actually run at the base level. It's not run at the top level of giving you money, and it requires complicated information. So it's another one of those opportunities, person-to-person payments, where I think the banks don't really have domain. Fintech firms can jump into that space really nicely, so long as they recognize that they are providing a service where the account level is run either off a bank or potentially off a blockchain, Bitcoin store of value. I don't think a fintech firm is going to go and say, we are a store of value ourselves.
We all know that we've got an issue around SME lending, and the banks have not done anything to help us in this regard. But there's a huge funding gap within the SME funding space. But what the interesting thing that Merchant Capital has done is actually their collection method in terms of the loan that they give out. So you go up and you apply for a loan, you must have a point of sale system, because then through the point of sale system, they're able to assess your sales and your revenues, and they've got smart algorithms that are running in the back, and they're able to, then they award you the loan. But the difference is that, unlike a bank, how many of you you've probably maybe been using your bank for about 10, 15 years, and the day you say, I need a loan, what do? Here's a form. Or here are forms that you need to complete. But you've got my details. Why are you asking for my name, my surname, my address, you've got all that stuff with you. And that is all removed with Merchant Capital. And what they do is, when you decide to close shop and go on Christmas holiday, they don't get paid. So they get paid when you get paid. That is the difference. So if you've got peak season between January and June, you pay off your loan much quicker. If it's downtime after that, they get paid less. And their non-performing loans are actually less than 2%. So what they've proven is that people want to pay back their loans, number one. what they're proving is that alternative sources of data around credit scoring and assessing SMEs is another way to disperse loans, which is something that the banks haven't explored yet.
I've been building internet banks, mobile banking operations for a little while. But I think the key message that I keep going to is that banking is actually a verb and not a noun. We keep on thinking of banking as the bank, this thing, this institution. That people don't need that. People need banking, the activity. There's something that you do. You are borrowing money for a purpose. You are paying somebody. Those are activities. Those are verbs. So, rather think of what are you doing in the active sense, not in the sense of, what does your license give you? Because I've been inside banks, bank licenses for 15 years, been outside for 5 years, and I think there's a lot more opportunity, frankly, on the outside. Without being constrained by the organization, but delivering the issues that people need, which is they need banking services.
It's going to take some time. If you talked to people back in the day that we were trading gold coins, and you try to explain to them what we're doing today with mobile banking, they would really think you're from another planet, right? And yet right now, if someone uses gold coins to pay, we think they're from another planet, right? So the world changes, and I think the only thing to say to that is that it's very, very easy. It's just a matter of time for the adoption to take place. And I just want to say one thing, because it relates to banks, is if banks think that they're in the business of government currencies, then they haven't understood their business well.